The banking major HDFC, which has come out with its Q2 earnings, and this time around we are seeing the profit coming in a bit higher to the 18-hour estimate, 15,976 crores, I beg your pardon, 15,976 crores is what the company has reported in the bottom line versus the 18-hour estimates of 14,800 crores. So a good performance coming in on the profit figure. When it comes to the provisions, that's actually lower to our estimates. We were expecting that number to be 3,100 crores, 2,904 crores is what the company has reported. And other than that, we have seen an improvement coming in on the asset quality as well. So those are the headline numbers coming in from HDFC Bank. If we talk about the net interest income, 27,385 crores is what the company has clocked in, a slightly lower to our estimates, but nevertheless, we can say a decent set coming in from HDFC Bank. NII, there has been a slight miss, but let's get in more details from a banking expert then, and Harsh is joining us to decode the HDFC earnings then. And Harsh, what are your first takes coming in on numbers?
Well, yes, the numbers broadly, Srishti, seem a slight miss with regard to where top line is concerned. NIMS is where there was always expected to be some amount of pressure, and that seems to be going through as well. Also, what is the kind of impact that NIMS have had from the kind of deposit growth that HDFC Bank has had? 5% plus, mind you, sequential deposit growth that HDFC Bank clocked. And that's likely where the NIM knock has come from. Let's also look at operating profit. Operating profit was largely in line, just slightly softer than what we had expected. We expected that number at around 23,000 crore. It's come in at around 22,600 or 700 crore, 695 crore odd. You're looking at provisioning, which we were expecting at around the 3,100 crore mark. That's come in lower, 2,900 crore. And PAT is largely, in fact, slightly higher than what even we expected. So the PAT number coming in very close to that 16,000 crore mark. We were expecting a number of around 15,000 crore in a good case. Roughly 14,800 crore is what we had penciled in with regard to PAT. So definitely better. We're also seeing that on the NPA ratio front, there is some amount of improvement in NPA ratios. Mind you, HDFC Bank post the Q1 numbers had released an update saying the GNPA ratio was at 1.4%. That has come down to 1.34% now, and the net NPA ratio, which was at 0.4%, has come down to 0.35%. So you can see asset quality trends also getting slightly better. So a couple of hits, a couple of misses, but let's try and quickly take a deep dive. We have with us Mahantesh Sabaraj. Mahantesh, talk to us about how you're looking at the headline numbers. What's your view?
So right now the results seems to be quite all right, but then one cannot miss the fact that it is still deteriorated with respect to what we had a quarter ago, particularly on the NPA ratio. Otherwise, while most of the street were expecting a sort of a bad result come out from HDFC, this at least proves they are a little steady.
Right. Mahantesh, what's your view on the NIM number? Because the margins seem to have softened a little bit more than what the street was penciling in. What's your sense?
The NIM number was being penciled in lower because the asset quality was expected to worsen quite a bit. While it did worsen in terms of asset quality, the NIM number is slightly better.
Right. And would you at all say that the deposit growth has contributed to that? How would you view it?
I think it is more got to do with the composition of the advance book rather than related to the deposit book. But remains to be seen. I have not seen the cost of deposits kind of number or the cost of funds kind of number as yet. Too early to put that analysis in.